And I'll tell you what, in 2020 and 2021, there were moments where we were generating an equivalent of like $80 per MCF. The return on the system was generating for doing almost nothing. And to me, it just seemed so like, how was this even real? And why isn't the rest of the world doing this?
All right, welcome to Local Energy. My name is Peter Brecht. I'm here with my co-host Wade Spear, and our guest today is Paul Cockerham at Verde Mining. Paul, thank you so much for joining. I am just beyond excited for today's conversation. This is coming out a couple days before NAPE starts, but it's our first Bitcoin, oil and gas collision of conversations here on our show. So thanks for joining. How's your day going?
Oh, it's going excellent. No complaints. Happy New Year to you guys.
Yeah,
Again,
yeah.
thank you for letting me have that spotlight. I hope I can bring the good news for you guys.
Yeah, I'm not too worried about that. I've just even the pregame and talking before the show, just the stuff that we're going to talk about today is hopefully helpful. But so you're out there in Midland, Texas, is that right?
That's right. Yes, I live here. I've
Perfect.
been here since 2010,
Okay,
working in the oil and gas industry yet.
right on. Texas, as I understand it, so you got Texas is the first state to start a strategic Bitcoin reserve. Back in November of 25, I think they bought around $5 million worth of Bitcoin at 87,000 a coin through iBit. But how does it feel to see your state moving from to actually holding Bitcoin on the balance sheet?
I couldn't be happier. I think that that's like a common first step to kind of like jumping into the deep end with Bitcoin specifically. No matter where you are, just buying it for the first time, and then you can start understanding how immense of a move you made for yourself. And in Texas, look, we're the oil and gas capital, in my opinion, of the world.
Okay.
We have a heck of a lot of extra resources to play with, and it would, to my, I guess selfishness, I am thankful that that state that has sort of that I guess foundation is making that move. And I think that
Yeah.
that will dictate a lot of the other states to follow in that footstep. And
Mhm.
there's no telling what they're going to do with that money. I hope it's all for good, right? And like
Yeah.
we all expect that to be the case. But without, complaining about anything, I am very happy that we are setting that standard as a Texan for sure.
Yeah. 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 Absolutely. Well, you've got Wyoming and Arizona, I think, that are working on their next steps. And as we record this, the Bitcoin price, we're just under 90,000. We're recording this kind of in the middle of January. Crude is at just under 60, and natural gas at 550 for just a pricing reference as we go this. But man, I signed up for your email sequence. So if you go on your website verdemining.com, you can sign up for like a 5-day kind of overview of what you guys do. And so I'm on day 3 of it, and man, holy cow, there's so much information in that course. So it's not like a course per se, I should say. It's more of here's some information. But I want to talk about that a little bit more. But talk to us about your background and how that plays into Verde Mining's day-to-day operations.
Sure. Okay. So I'm a undergrad as a mechanical engineer, and I got my master's in petroleum engineering. Texas Tech undergrad, U of H master's. After grad school, I moved out here to Midland, jumped into the oil and gas industry as a driller. Ran the whole prospects, from drilling to fracking to completions, as we call the full vertical integration of oil and gas.
Hey guys, thanks for listening to this week's episode of Local Energy. Please remember to like and subscribe to us here on YouTube or Spotify, or check us out at localenergy.com. All right, back to the show.
And the fact that oil and gas is so immense, the energy behind that industry is so immense. We in Midland are excellent at generating it. And unfortunately, we are not the best at getting it to the marketplace. And so you see in Bitcoin world is very much the perfect solution for a lot of oil and gas problems that we run into.
Hey.
Bitcoin mining is just one solution, but the fact that Midland has all this power, and again, we're in a bit of a situation where we don't have the ability to get that resource out of the marketplace where we are. Some of it goes to the ship channels and all that, but you'd have to build 10 more pipelines to get all the resources out of here. And I think that that puts Midland, specifically Texas, as you say, these strategic Bitcoin reserves, you're going to
Yeah.
see them popping up where there's oil and gas activity in that state. If
Okay.
states have those sort of, if you can generate revenue through oil and gas, then I promise you Bitcoin is going to follow in close behind. So specific to Verde mining, it wasn't until 2020 that I started mining Bitcoin here in Midland. And my first choice of low hanging fruit, as I would call it, was flare. And in West Texas, we have an abundance of flare gas. They're doing a lot better at curtailing that. But typically, if it's not flaring, then it's not flowing. And for those guys that say, well, we're not flaring, okay, well, you're also not producing that oil either, because if you can't burn the gas and you're not moving it through some pipeline, then that oil is also stranded. So I started on flared gas, and my background being production and operations and kind of spending my entire career out here and seeing natural gas is the redheaded stepchild, right? That's how we treat it. We care about oil. We don't care about the gas. The Bitcoin thing kind of hit us out of nowhere, left field, and slapped you in the face and said, no, dude, the gas is absolutely the market. And I think you guys are missing the forest for the trees, and thankful that Bitcoin, that technology, supports that. And so my jump from oil and gas centric production operations into Bitcoin was more of like a, let's see if we can do this. Like, they say it's true, and I'm an engineer that wants to get hands on and tinker. And so I was like, yeah, let's do it. Let's throw some money in the hat and buy 40 miners from Kazakhstan. They were 66 terahash S17s, right?
Okay. Yep.
And knowing nothing about that world, I drove to Austin, which is now Riot. It was the Alcoa plant. I picked up my pallet of Kazakhstani ASICs, and I came back to Midland. I bought an upstream data 90 kilowatt hash hut version 1. And plopped it on location and plumbed right into the two-phase separator, which for me in oil and gas world is just a big vessel, a big vertical tank that cooks the gas so that the liquids drop out of the gas, and then you're not sending wet gas or anything like that down the line. So tied up to that unit, and then I just started sucking gas, rented a generator. And in those days, I will tell you that I was buying the gas for 50% of Henry Hub, whatever the cost of Henry Hub was, because the gas that I was burning was flared gas. Okay. That gas had never had a marketplace. The family who was producing that oil and gas for 20 years never sold a molecule of gas until I came along. And I bought it at 50% of Henry Hub. I didn't care if Henry Hub was $6 an MCF or $1 an MCF. We were just happy to be online trying this out. And I'll tell you what, in 2020 and 2021, there were moments where we were generating an equivalent of like $80 per MCF. Like the return on the system was generating for doing almost nothing. And to me, it just seemed so like, how was this even real? And why isn't the rest of the world doing this? And then go 5 years and we're here now, and slowly the world is actually coming around to seeing the benefit of this. So, to not rant on here, the background that I have and the location that I fell into and the ability for the technology to have its footprint in the United States, kind of all, like you said, crossroads coming together at the right time. I was just a lucky guy that kind of just fell into a cool technology, and now I'm in love with it, and it's the best that we have on the planet. And so I guess that's a small, rendition of who I am and kind of how I jumped into this Bitcoin world, and I guess where I am today.
What are you guys still running the upstream data material, or you guys have your own version of that? I mean, I've been a fan of Steve and watching him build that for the last couple of years. And I mean, it's such a cool concept of what he's doing. And I think they're on like version 3 or 4 now, even, of what they're building with those modular systems. But are you guys still using that setup, or have you transitioned to something else for your clients?
Yeah, no. So that system has been sold. We sold that off to another group that is mining it. And the actual core system that we first developed was essentially buying a full kit and caboodle from Giga. Giga Energy. They're in the business. Back in the day, Giga was building generators and containers. And so we bought a container and a generator that they had basically paired together. The generator was based on the volume of gas that I had to work with.
Yeah.
My choice when I first started out was to play around on the oil field and prove it worked. But then when we proved it worked, we said, okay, I'll put the flare out forever. And so we wrote a letter to the Railroad Commission, told them, hey, we have this idea and I would like to put a Bitcoin mine on this operator's asset. And the Railroad Commission came back and said, absolutely, we love it. We will give you an 18-month window of a permit to flare while you figure out all your stuff. Well, the Railroad Commission didn't know that I was already out there for a year mining. And so I already had the system. I just was going to scale it and take the gas out in its entirety. And so I did that. And that there's a learning process to this. Sure. And I'm going to tell you it. In doing that, we bought a single engine and a single container designed for that volume of gas. Well, as an engineer, I overlooked one of the biggest problems. Gas wells decline. And so about a year into the project, gas wells declined to the point where there was not enough gas to even turn on the generator. So I had bought too much generator for the project of gas that we were basically given. Okay. And that's a good opportunity to learn. Steve Barber builds his containerized combo units at a rate of gas output that is more normal for stranded assets in the oil and gas industry. His units can consume volumes of gas that are a lot lower in volume day rates compared to like what the larger big guys are looking for. Okay. And so there's a niche to that, right? He has the smaller units that are perfect for these smaller assets. And then we built the bigger asset and it became basically obsolete to me. So I had to sell off a unit and degrade my units down to smaller units. And so the name of this game is to always be online, right? Yeah. And so we learned very quickly after falling in a deep hole what that solution looks like. So what the oil and gas needs out here are both the big players and the small players. And so the marketplace is ripe for the opportunity.
I was going to say, could you give me an idea of the footprint you're talking about between the big and the little, and not just in terms of like size, maybe on location, but also gas volumes that you're referring to? Because, you know, if I think about stranded gas, a little bit different in Oklahoma, I think, than it probably is out there in the Permian, where takeaway here, I mean, we're a gas basin for the most part. So yeah, for us, gas is money, but for a lot of stuff in Midland, like you said, it's not able to be captured or taken away.
Well, in the state of Texas, you're allowed to vent up to 50 MCF per day without a permit. Okay. And that's low volume. In my opinion, anything under 100 MCF a day of a system that is producing intermittently, it doesn't matter if doesn't have to be perfect amounts every hour throughout the day. I just need to know that it's 100 MCF in 24 hours. Anything from 100 down to, look, when I started, I was mining with 10 MCF. I was running 1 petahash. I was able to get like 10 miners or 20 miners going of the 40 because they were all broken from Kazakhstan. And I didn't know the first thing about Bitcoin mining repair. So I was kind of like dealing with what I had available. So 10 MCF is like the proof that that's how low you can go. You could probably go smaller if you wanted to, but it's just, there's a break-even point where you have a threshold where, do you want to drive out to location at 2 a.m. for some problem for 10 MCF a day Bitcoin mine? You do not, because that doesn't even pay for the gas to get out there. Compared to, the metric here is 1 megawatt tranches, okay? So 1 megawatt is 300 MCF a day. Well, when you're typically dealing with oil and gas guys, they have some of these wells that come on an IP like 1,500 MCF a day, 1,500 MCF, or 1,500,000 standard cubic feet per day. And those are what we would call kind of stepping into the larger scale. And for us, most of the gas features that operators are looking to solve fall under 2 categories: small volume, like plunger lift, 100 MCF or smaller type systems, or big 10 million standard cubic feet a day need. However, that's only going to be for 6 months because they've got compression coming, but they need to turn on today, but the They got a pipeline. They're just not ready to produce to the pipeline because they need their compressors, and those are a year out. So they can't burn the gas and produce the oil because that's not allowed, or that's against their motto. And so I guess the oil and gas sees it basically those two different ways. Yeah.
And these are modular. So, I mean, you could technically run one for 6 months or even, a short period of time. So, it just depends on where it's going next.
So, yeah. And again, like we're early in this space. So there's not enough Bitcoin miners in existence on gas to have a fleet of generators sitting in a yard, not getting used. Like to a Bitcoin miner, what? You're not mining with it? What? Your engine's not on? So we can't really do that yet, but like we are building to that service. That's why the pipeline comes in and is such an integral feature in the whole oil and gas opportunity here. The oil and gas companies want gas takeaway to whatever they are seeking, and then they're going to kick you off. But you want, as a Bitcoin miner, I need longevity. I need at least 2-year runway to pay off this equipment. So what do? Well, kind of you mix both worlds. You come in there and you do something what we call hub and spoke. You go and sign a NASB contract on the pipeline where you have a market like Waha that's usually negative, and you don't have that in Oklahoma. You don't have Waha. Right. You got market. And
thankfully, we don't have Waha.
Yeah, well, not to the Bitcoin miner. The Bitcoin miner's like, I want Waha in Oklahoma.
Right.
But so we know that like those marketplaces are positive and negative to kind of what we're trying to accomplish here. I'm sorry I went off on a tangent there.
That's all right. That was great.
Brings it home for me.
Information it's really important that how oil and gas operators see you and then how you see yourself as the solution. And most Bitcoin miners just want low-hanging fruit. And I think they miss the forest for the trees where they're not thinking of themselves as a service to that operation before they are just a service to their investors, right? So you got to have a relationship with the oil and gas community first before you come in there and say, oh, I'm going to make you guys a bunch of money. No. It's like, I'm here to solve for these problems that we have out here because there's tons of them. And like you said, like Scoop Stack, they got their stuff figured out, but Waha hasn't. And in the meantime, this is a great arbitrage to, either make better choices in the future and build the infrastructure that's necessary, or, this is obviously the low-hanging fruit that we're all accustomed to. Hence the reason everyone is moving to Texas to do data centers and Bitcoin mining.
Mm-hmm. No, that's a great point. The data center conversation is a whole nother animal. And like, I've been talking to people about grids and, how data centers are operating versus shutting off Bitcoin miners, and like just the value of having a miner online that can shut off instantaneously if they need to redirect power and stuff. That's a whole nother piece of this, which is kind of fun. But it seems like the other thought I have here is you're talking about like people that are adopting this technology is, are you guys specifically looking to go like are people coming to you and saying, hey, look, I've got stranded gas, please buy it from me, and you guys keep the Bitcoin? Or are they saying, I want you guys to set me up on the technology so that I can own the Bitcoin? Like, what's the conversation like? Because you could almost think of it as like you can do it both ways, but it almost feels like a conflict of interest if you choose one over the other. Like, do you have to pick one, or can you do both?
You definitely have to pick one option, but either can work. So this is not financial advice, what I'm going to go into, okay? I'm just going to
Nothing on our show is. We're just talking shop.
I'm just going to tell your listeners how it can be perceived. There's two ways. You're going to have two different clients. So we do a training course. We train people. It's like a 3-day training course, and we teach you how to mine Bitcoin on gas, and we take you out to sites. The people that come to that training are the same in the world. So you have folks that want to mine for themselves, and you have folks that want to get mined, right? And so that's the same with the oil and gas world. You have folks in the oil space that want to do it for themselves because they're hearing something. And then you have people saying, hey, dude, I've been paying $1 to get rid of my gas. Would you buy my gas from me? And like, what kind of market could I be? Let's get into those two different worlds. World one, where I'm just buying gas from you and you are not participating at all. That is going to be a static model. 9 out of 10 times, a Bitcoin miner, if they know what they're doing, are going to come and offer a static price on a multi-year term. I talk about this a little bit in the class or in what you're reading in the emails.
Yeah.
So the oil and gas are slow to adopt, but when they do, they take it over. Okay. We've seen it over and over again. Typically, I would go out and say, oil and gas operator, I would like to buy your wellhead gas. Maybe it's flared gas, maybe it's stranded gas, or maybe it's a short-term contract like we're talking about for 6 months until compression gets there. But either way, that gas has value, and I'd like to be the one that uses it. I'm going to set up a structure, not the 6-month piece, the other ones, and I'm going to need like a 2-year minimum. And I'm going to go to that I'm going to go to the oil and gas operator, and I'm going to look at your gas composition, which is going to be your gas analysis that you're going to give me, and you're going to tell me what the quality of your wellhead gas is. And I'm basically going to put a price to that. And that's going to be a static price. It's somewhere between 25 cents to, could be up to $1.50 per MCF for the entirety of the contract that I'm out there. I would be buying your gas for 50 cents per MCF for 3 years. That's an option one. And then that option, I am buying your gas. I am a virtual pipeline, okay? And if a mineral interest owner is going to get mad because the real pipeline is buying the gas for 10 cents per MCF, and I come along and offer the same deal, you can't get mad at me. I'm just saying this.
Mm-hmm.
You can't be mad at me, the Bitcoin miner. You're going to have to be upset with the operator. They're the ones who have your fiduciary interest at hand. So
Sure.
if they're making the deal, they're the ones that pay the royalty for whatever they as the operator can generate for that product, that commodity. They don't dictate the gas price. They are just trying to get the best price they can. So you
Right.
see that
Are you offering more than the 10 cents, or are you saying, hey, that's what we're going to offer the same? Because I would say like they're only going to switch if there's an economic variable that improves their situation.
And that economic variable is usually volume. So if they're asking for this and they have the volume, then the price can go up. Typically what happens, and yes, we would just say, hey, your gas, I'm sorry, but your gas is still worth 50 cents or less. And you're asking for 1 megawatt to be consumed out here in the middle of nowhere. And my threshold is like 2 megawatts for enough food for meat on the bone for everyone to eat, right? So that static price is going to be less for you, operator. But you get your oil out and you're not flaring, and you get everything else that you wanted. And because you chose to operate a Bitcoin mine with me, you don't pay gas severance tax anymore in the state of Texas. The House Bill 591. And so that's 7.5% you save as an operator. You don't pay that tax because you are mining that gas with Bitcoin.
Yeah.
Those are sort of the features for that. The other option, which we are pushing more of, is, hey, operator, do you want $1 per MCF? Because that's what I'll offer you today. Or how about you put up the money, because you can write an AFE very quickly and have your subordinates pay for this. And this, maybe through this process, we can now realize $4. We're going to beat Henry Hub. Like we will always beat Henry Hub if we are mining for ourselves. And in that situation, then there's a plenty of meat on the bone. And I am now serving as like a contract operator to that asset. That's what I would like to do for the oil and gas guy. I don't need to own those assets. I'm happy to take a small percentage piece of the operation to maintain that operation. And it would just be like your standard, it's honestly going to look like probably an 80-20 split. The operator pays LOE, pays everything, pays all capital costs. Bitcoin miner comes in, generates $10 per MCF gross, and walks away with $2 an MCF, and the operation keeps $8. And now you're saying, hey, we're making $8 per MCF. Now we turn around and pay our mineral interest owners whatever their portion is of that $8 that they're due. And now as a oil and gas company, you're going to be the best of the best at being the fiduciary to that lease contract that you signed years ago before you started drilling. I'm just saying that's coming, and we push for that agenda. We want the oil and gas operators to take on Bitcoin. It's not hard. Mining Bitcoin is not hard. The hard part is maintaining power 24/7 on. That's the part that we shine at. We're engineers. We can do that. Like we work in this industry.
Right.
Everything that we do in the oil and gas is a copy of Bitcoin. The only thing we're missing is the ASICs. We have everything in the industry already exists out here in the field, and we already know how to do it. And the beautiful thing is the Bitcoin mining industry is building to our power standards, which is 480, 3-phase, and no longer that Chinese stuff, okay?
Yeah.
We get the American stuff, which runs better, cleaner, and it's cheaper to build. So I rest my case. There are two different people that are seeking. One is going to get the cheap static price, and then the guys who are willing to do it and do the work, they're the ones who are going to win, take home the $80 per MCF
Yeah.
market.
Well, and I think that's where the light bulb goes off too, is like, okay, so I'm gonna, this goes back to a comment that I read on X a couple months ago, which was, Bitcoin mining is parasitic, or, on the grid. And I think there's a certain perspective where I could agree and understand with that, especially, if I go back 10 years, 5 years ago, when I didn't know what Bitcoin even was, right? And I think everyone goes through this arc of like, you buy a little bit on PayPal when PayPal was doing that, and then you're like, oh, I hate this. I just lost, I lost $5,000. And then, you know what I mean? Then the next thing you're like, you're doing it again. And I think by the time you do it a third time, you start to understand the technology, right? And you want to study it. But, in this case, Bitcoin could be perceived as parasitic, but I think that what it's doing is actually drawing another, it's another income source, and it's also taking a negative, a flaring, and turning it into something better. So, I mean, what's the perception of Bitcoin? Is it positive where you're at, or do you still get the people that are like, oh man, I don't even want to talk about that. That's radioactive. What's the sentiment?
I would say it's still a pretty gray area.
Okay.
Or, oil and gas at $55 oil is not great. But like the ROI on these mineral deals are excellent. And there's no denying that if Bitcoin doesn't exist, that these guys aren't going to make money. Okay. Like oil and gas does very well on its own, just not needing anything other pressure from anyone else telling you how to make more. So it's a fine line. I think Bitcoin has like a CAGR that people are claiming of like 25% or something.
Yeah.
Like maybe, like if that's really happening, but like oil and gas is like can be 25% too, right?
Sure.
So
Yeah.
like I think that there's not enough like Exxon isn't coming out showing how it's done, right? They're not doing that yet. They're probably doing it internally, playing devil's advocate. Like I don't know how to answer that question because
Sure.
because the industry is already very strong here, and Bitcoin is just a bolt-on to anything we're doing out here in the oil and gas world. And it's a huge gain solution, but folks can make really good money and really good returns just staying in their lane of just the oil and gas, just being good stewards of oil and gas and not thinking anything else, that they're going to do fine. So, okay, some of them, yes, some of them, no. Okay. And typically when we're talking to the big box guys, like the publicly traded companies, we don't bring up Bitcoin. None of them want it on their balance sheet still. I promise you. Nobody's putting Bitcoin on their balance sheet. They're claiming that it sounds good by nature, and others have made examples of it. But the oil and gas guys are just slow to adopt. But when they do, it's over. No, there won't be any more miners for you and I to buy for our house.
Right. Yeah.
Everything will be backlogged. Do you think data centers are backlogging generators? Just wait until Exxon and the pioneers of the world are like, no, I think we want to play this game too. And we can buy the generators faster than the data centers because those don't even exist yet. And we've got 100 years of oil and gas generating revenue that we can bank on to buy those engines for twice as much, right? We could outpace the data centers if we wanted to. And let's not forget, back to the grid stuff. Where do you think that grid comes from? The grid electricity comes from. It's us. It's gas. It's peaking plants. Right. So we're already the best at making your electricity. So why wouldn't we just do it at the source? And I think that's what's catching on. But the Bitcoin piece, they don't want that. They want the daily ACH contribution. And that's where we kind of shine as well. Hey guys, remember net 30? How about net 24 hours? Like how about getting paid for your resource the day you produced it, not 60 days later? Bitcoin can do that for you. Nobody else can. So there's trade-offs. There's trade-offs for like that sort of thinking, but the Bitcoin on the balance sheet, we're not there yet. So let's keep pounding that at NAPE. We'll work on that.
Yeah. I'm certainly not mining Bitcoin in California. We pay about 36 cents a kilowatt hour.
My goodness.
So I don't think it's not worth it. In fact, I got to keep the lights off at night. But I'm going to turn this over to Wade for a quick second, because Wade and I, and this isn't something that Wade and I really talked about before, but what do you see in Oklahoma, like in the circles that you're with? Is this even a conversation, or is this more of a Texas thing? Like, how would you define? I don't know. Like, what's your concept of Bitcoin? I'm curious.
I would say, aside from a personal level, I've seen the conversation happen 2 or 3 different times, where we worked at a company that had a gas processing plant, and people would approach and talk about being able to purchase some of the gas and do some of that. There's probably resistance to it for a couple of different reasons. Number one, I think it's seen as a volatile asset, which, you kind of laugh at because it's like, well, what about oil and gas? I mean, you want to talk
Yeah.
about volatility.
Yeah.
We set the curve. But I would also say in Oklahoma, I think there's resistance too. Oklahoma is like, what Paul kind of hit on. I mean, it's a gas basin. Yeah, we have a lot of takeaway already set up. And so, getting it to market isn't near as much of a challenge. The really interesting thing I think you're going to see though is kind of what you're talking about is finding some of these areas where gas is stranded or pipelines are even being filled. I mean, there's some of those areas where we've been to where they're shutting you in because they can't do takeaway. I see it, if what you're saying here, I guess one of my questions, and this is maybe from a stupidity question is, 5 years ago you talked about being able to make $80 an MCF, right, on your gas return. You go out there and you start throwing that out to operators, and I think you get big eyes. Now, from what I understand of Bitcoin, right, as it gets closer and closer to all of it being mined and being in circulation, it becomes more and more challenging. What have you seen the economics do in
Yeah.
regards to that
Diminish.
over the last 5 years?
For surely. Yeah. Yeah. You hit a nail on the head. It diminishes for sure. Obviously, first to the game, early adopters kind of relish in
Right.
that those small wins that come along in the marketplace. But there is a decline over time as you mine for the next 120 years. But you are paid for maintaining that ledger. So I think as a Bitcoin miner, you're going to find in the future maybe more spread out facilities that can be like if war struck and
Right.
you just have to go to like the plant over there, the data center, and shoot a couple transformers out and the whole 5 gigawatts is gone. You're not going to take out 5 gigawatts of data centers in the oil and gas fields if they're all small, thousands of them all over the
Right.
place.
Modular and
Yep. So
right.
there's going to be some sort of strategic like defense piece to that. And so I think that that's going to bode on how you develop assets out in the middle of nowhere off grid because there's a safety concern, not to blow up, a safety concern that it's going to like attack you personally in your data because that's what we care about is our data.
Right.
And I mean, oil and gas is nothing different than the banks and they protect our data. I think those opportunities are going to be more as we.
And one of the really interesting things you were talking about earlier was that I thought, I guess, being secondhand or hearing a lot of these kind of discussions secondhand up to this point, the point about the operator going out there and purchasing the equipment and essentially having a contract operation that runs it for a percentage of the that's it, like you said, that's nothing new to oil and gas, and that's something that I could see maybe being more easily adopted. But like you said, it's probably not going to be the Exxons and Conocos of the world. It's probably going to be the smaller operators who are working some smaller
who
fields
don't have the pipeline. They don't have the
Right.
pipeline. Exxon has the
exactly.
pipeline. They come to
Yep.
them first. So the mom and pops are getting snubbed and they're like, okay. And let's not forget in Scoop Stack, you're going to have operations there say, you know what? I don't care that there's a pipeline here. I'm not going to do an acreage dedication with this midstream company unless they give me these 9 get out of jail options. And one of them is if I want 30% arbitrage myself to mine Bitcoin because the oil company want Bitcoin on the balance sheet, we'll continue to send the other 70% to you guys, the pipeline. No, we're not going to take that deal. Then piss off. The deal's not yours to have anymore. I'm telling you right now, when they do it for themselves, because they don't want to just make $3.85. They want to make $6 because that's
$3.85 would be great sometimes. That's the challenge, right? Like I still remember 2020 when we were selling for less than $1 at the wellhead. I mean, we aren't Waha, but it can definitely get down there,
Yeah. No, you're right. And there's going to be the opportunity that Bitcoin presents to you is that you are not in a marketplace. Oklahoma is going to make midstream come up in price because they're going to say, you know what? I'm not going to send 100 million a day to the system anymore. We're just going to figure out how to mine it here, do data center city, and you guys can go pound sand because you're not giving us a fair shake. And this gas is worth $9. So give me something closer to 9, not closer to 1. And if they're like, oh, we need to rebuild the pipeline's already there. We're drilling
Right.
new assets that can
Yeah.
be tied in. We don't need you. You need us. That's what's going to happen here in the next couple decades.
Interesting.
Interesting. Yeah, that is. I have to think about that one a little bit. Well, as we're coming up here on our time, and Paul, I hope to talk to you more here in a couple of weeks. But you'll be at NAPE, so I'm just kind of curious, like, what if there's any particular, like, you'd be walking around, no booth, but like, is there any, are you going to be wearing a hat or anything? Like, how am I going to recognize you? I guess, like, I don't
Well, that's
know.
a good point. That's a great. I will be on the floor. I will be walking
Okay.
around. I'm 6'5", I'm very tall.
We're done. We're good.
I will. I'll be
You
hanging
gotta wear
probably
like
around
one of the like, in Bitcoin orange or something.
Yeah.
Like
Yeah, maybe I'll just
a Bitcoin
dress up as
orange
a
cowboy
Bitcoin,
hat.
Yeah.
the Bitcoin bee. That would be pretty cool.
Done deal.
Yeah, no, I'll be on more so in the Bitcoin and data center area, and
Okay.
happy to talk to anybody that wants to pull me to the side and
Yeah.
riff about
Sweet.
Bitcoin. Game on.
Massive Bitcoin presence. This is my first year going, and I'm excited. And I see a couple guys that have actually been on the show. You have to go. First of all, like, I get to hang out with all these guys and meet them in person. So whatever, book my flight. But excited to meet you as well. Give people a handoff. Where can we find you? How can we get in touch? Go from there.
Yeah, so we have verdemining.com is a great way to get access to us. We also have verdetraining.com. We do a training program. Anyone who's interested in kind of taking the next step to learn more and come out to Midland and hang out with us for a few days, you can do that.
Yeah.
We have a training coming up in March. Let's see. We have a lead instructor, Mike. Mike lives in Houston, Mike Santaniello. You can reach out to Mike at verdemining.com. You can reach out to Paul at verdemining.com. I would
Easy
love
enough.
to talk Bitcoin with anybody who wants to talk natural gas mining. Absolutely.
Awesome. Well,
That's
Paul,
awesome.
thank you so much for being on. Wade, always good hanging out with you. I'll see you guys again next week. I appreciate it. Thank you.
Thank you.
Thanks.